What if the world's most stable financial assets like U.S. Treasuries, weren't locked away in traditional institutions? What if they were as accessible, as easy to trade, as global as a digital token? And what if the very foundations of traditional finance were quietly, powerfully being rewritten on the blockchain, and you could actually understand how without feeling, lost in the jargon? Today, we're taking a deep dive into Ondo Finance. They're a platform not just participating in, but really leading the charge in tokenizing real-world assets RWAs. Our mission for this deep dive is, to unpack the remarkable story of Ondo Finance, how it's actively bridging traditional finance with the blockchain, what its key yield-bearing offerings are, and the crucial role its Ondo token plays. We'll explore the underlying why behind its explosive growth, and maybe most excitingly, we'll unveil some recent, almost unbelievable moves by financial giants and even entire countries that could profoundly reshape Ondo's future, and perhaps even yours.
Yeah, and what's truly fascinating here, and what gives this deep dive its real urgency for you, is that we're talking about a projected market of, $15 to $16 trillion for asset tokenization by the end of this decade. That's huge. Ondo Finance isn't just dipping its toes in, it's aiming to play a really pivotal role in that massive shift. They're actively working to democratize access to institutional-grade financial products that were, once exclusive to the big players.
15 to 16 trillion, that's a staggering figure, and it really hints at a fundamental transformation. For our listeners who are already familiar with the RWA concept, how would you quickly frame what tokenizing these real-world assets truly means?
Yeah.
In terms of bridging traditional finance, TradFi, and decentralized finance, DeFi, beyond just like a simple digital copy?
Right. It's definitely not just a digital copy. It's more of a paradigm shift, really. Tokenizing RWAs fundamentally means taking an asset with tangible value, think real estate, government bonds, commodities, whatever, and representing its ownership and value on a blockchain as a digital token. The bridge isn't just about moving data, it's about importing the inherent stability and yield of TradFi into the efficiency and accessibility of DeFi, making it programmable, composable, and crucially globally available 24/7. It's really about leveraging blockchain's infrastructure to unlock value that was previously siloed.
Okay, so it's more than just data. And for an asset to make that leap onto the blockchain, it's not just a simple copy-paste operation.
Yeah.
Could you quickly walk us through the critical stages of that tokenization process? From formalizing its real-world value to its final digital minting? What are the absolute must-haves?
Certainly. It starts with off-chain formalization, and this is absolutely critical. You can't skip this. This is where you legally confirm the asset's value and iron out its ownership details in the real world. So property deeds, legal registrations, bond agreements, things like that. Then comes information bridging. Here, that verified real-world data gets securely converted into digital metadata. Blockchain oracles are key here, acting as these secure conduits to feed this information to smart contracts. And finally, you have token minting and distribution. This is when the smart contract actually creates the digital tokens representing a share or maybe the entirety of that asset and issues them onto the blockchain where they can be transferred or traded. Every step is meticulously designed to maintain integrity and legal standing.
Right, integrity is key. And these benefits you mentioned, they sound transformative, but what's the real aha moment here? Like, what does making assets like real estate liquid 24/7 or allowing fractional ownership truly unlock for the average investor, beyond just the convenience factor?
Well, the key insight here isn't just the easier access or faster transactions, though those are great. It's really about transforming traditionally rigid, exclusive assets into highly dynamic, inclusive investment vehicles. Imagine taking, an illiquid asset like a commercial property in New York. Suddenly, through fractional ownership via tokens, a retail investor in Singapore can own a piece of it for a tiny fraction of the cost, and they can trade that piece anytime, anywhere. That's a fundamental shift in how we think about ownership and investment. We're moving from scarcity and geographical limits to broad global participation and continuous market access. That's the real game changer. Democratizing wealth creation, previously reserved for, the ultra-rich or big institutions.
That really clarifies the what and why of tokenization, a huge shift. But how does Ondo Finance actually do this? What's their specific approach to building this bridge?
Ondo Finance is essentially carving out a niche. They're acting like an open, decentralized bank, but, and this is important, with a highly institutional mindset. It was founded back in 2021 by Nathan Ullman, who's a former Goldman Sachs expert, which tells you something about their approach. Their core mission is to bring institutional-grade financial products, think U.S. Treasury-backed tokens, onto the blockchain, but in a secure, regulated environment. They're strategically positioned to attract serious capital. They do this by addressing the compliance and security concerns that often deter traditional investors from jumping into DeFi. They're making that jump from TradFi to DeFi appealing, not just, technically possible.
And their growth figures really speak volumes, don't they? From $125 million in tokenized assets at the start of 2024 to managing approximately $600 million now, with total tokenized assets across their ecosystem hitting around $2.2 billion.
Wow.
And that earned them the #2 industry rank in tokenized RWAs. What do you think is driving this explosive demand? Is it purely market sentiment, or is Ondo doing something uniquely right to capture this market?
Yeah, those numbers are incredibly compelling. It's not just market sentiment, although broader interest in RWAs is certainly a big factor. Ondo's success seems deeply rooted in its focus on yield and trust, two crucial things. They're offering genuinely attractive yields backed by the stability of U.S. Treasuries, which, resonates strongly in a volatile crypto market. People want that stability. And furthermore, their emphasis on compliance and working with reputable traditional finance partners builds the trust necessary to bring in larger, maybe more conservative institutional players. And also savvy retail investors looking for a secure, yield-generating alternative to, say, standard stablecoins. They've really found a sweet spot where security meets opportunity.
Okay, finding that sweet spot is key. Now let's dive into the specifics of what Ondo actually offers. What are the key products that are really capturing investor attention right now? And how might they uniquely impact our listeners' portfolio, whether they're seasoned or maybe just curious?
Right. Their flagship offerings are quite compelling, especially for anyone seeking stability and yield. First, there's USDY. That's the US dollar yield token. Now, this isn't just another stablecoin. It's backed by short-term US Treasuries and bank demand deposits. It's currently offering a very competitive 5.35% APY. So it essentially provides a yield-bearing alternative to traditional stablecoins. And it's already deeply integrated into major decentralized applications, dApps like Radium, Orca, dBridge on Solana, and even the Drift protocol where it's used as yield-bearing collateral. Then you have OUSG, the U.S. short-term government bond fund. This is also backed by U.S. Treasuries, currently yielding around 5.08% APY. It offers qualified purchasers direct on-chain exposure to U.S. government bonds. So these products are making traditionally inaccessible or slow-moving assets instantly available on-chain.
So these aren't just theoretical concepts, they're actively being used right now, providing investors exposure to stable, low-risk assets, but leveraging blockchain's advantages like 247 trading and maybe lower transaction costs. It really sounds like the best of both worlds. Beyond these core products, what broader use cases is Ondo facilitating across the ecosystem?
Oh, the reach is expanding rapidly. Beyond their core offerings, Ondo facilitates institutional-grade fixed-yield loans backed by yield-generating crypto assets. This offers returns similar to traditional fixed-income products, but with that enhanced transparency that DeFi provides. You can see what's happening. And critically, their commitment to cross-chain asset movement means these products aren't stuck on one blockchain. They're supported across Ethereum, Solana, Aptos, Cosmos, and even the XRP ledger. This significantly enhances liquidity and global accessibility for investors. It's about building a truly interconnected financial network.
Speaking of interconnected, the Ondo ecosystem is really expanding, isn't it? And it seems like a testament to their collaborative approach. They partner with centralized exchanges, OTC desks, various DeFi protocols, all to ensure deep liquidity for their tokenized products. But thinking about institutional trusts, especially with giants like BlackRock and Morgan Stanley, when Ondo moves assets to BlackRock's BUIDL fund, for instance, that $95 million transfer, does that present any new dependencies? Or maybe even a slight dilution of the decentralized ethos they started with?
That's a really crucial question, and it gets to the heart of the balancing act needed for RWA tokenization. While working with BlackRock and moving $95 million in assets to their BUIDL fund, well, it certainly demonstrates immense institutional confidence, and it provides a familiar, regulated custodian for the underlying assets. That's a big plus for institutions. But yes, it does introduce a layer of centralization, no doubt about it. However, I'd argue it's probably a pragmatic necessity for mass adoption. For the vast majority of institutional capital to enter this space, they need the security and regulatory comfort of established players. So I don't think Ondo is abandoning decentralization entirely. They're creating a regulated on-ramp, building a bridge that respects both worlds. The ethos perhaps evolves to decentralize where possible, centralize where necessary for compliance and scale. It's practical.
That's a nuanced but important distinction. Pragmatic necessity. And beyond these strategic partnerships, Ondo hasn't just been making financial plays. They've been incredibly active on the tech front, too. What are some of the most impactful advancements they've rolled out recently? What do they signal for the future of institutional finance on the blockchain?
Oh, on the technology side, they've been relentless, really pushing forward. Back in February 2025, they launched Ondo Chain. This is a permissioned Layer 1 blockchain built with the Cosmos SDK, and it has EVM compatibility. It's explicitly designed for institutional finance. It has built-in compliance tooling, low-latency minting, and even RWA-backed staking. This isn't just another chain. It feels more like a blueprint for how institutional finance can operate within blockchain's parameters, secure, compliant, but still leveraging decentralization's power for efficiency. Then, in August 2025, their enterprise EVM integration facilitated the very first cross-chain delivery versus payment, or DVP, settlement with JP Morgan's Connexies. And that is huge. It enables atomic swaps between permission and public blockchains, proving these disparate systems can actually talk to each other seamlessly and securely. And looking ahead, their Ondo Global Markets platform, which launched in August 2025 with the Q4 2025 roadmap, aims to tokenize U.S. stocks, ETFs, and bonds for 247 trading. They're doing this through partnerships with END Chain, Bidget, and Layer 0. These aren't just features. They're really laying the foundation for a truly global, interconnected financial system.
Those are genuinely groundbreaking developments, especially the JP Morgan integration. It sounds like they're not just building products, but entire financial highways. And they're also making aggressive strategic moves with funding and acquisitions. On August 1st, 2025, they launched the Ondo Catalyst Fund. That's a $250 million strategic fund with Pantera Capital, specifically targeting early-stage RWA projects, tokenization infrastructure, and cross-chain interoperability tools. And this coincides with their acquisition of Oasis Pro, an SEC-registered broker-dealer. What this acquisition signify for their long-term vision, beyond just expanding their reach?
Right. The acquisition of Oasis Pro is a very profound strategic move. It essentially gives Ondo a direct pathway to operate within existing U.S. securities laws. It effectively turns them into a compliant securities tokenization platform from the ground up. This isn't just about expanding reach, it's about gaining a robust regulatory license that significantly de-risks their operations for institutional clients and strengthens their position as a trusted, regulated entity in the tokenized security space. It's a very clear signal of their commitment to legitimacy and scale within the established financial system.
Commitment to legitimacy, yeah. And speaking of legitimacy, this brings us to a significant regulatory milestone. Indonesia. They legalized Ondo on September 1st, 2025, adding it to their approved crypto list. That potentially opens access to over 270 million people and boosts institutional trust. This raises a bigger question. What kind of impact will global regulatory clarity country by country have on the broader adoption of RWA tokenization?
Indonesia's move is definitely more than just a local win. It's a powerful signal to other nations. Global regulatory clarity is probably the single biggest unlock for RWA tokenization, full stop. When major economies begin to provide clear legal frameworks, it just reduces uncertainty for both institutional and retail investors. It encourages innovation and paves the way for cross-border interoperability. It legitimizes the whole asset class, attracting capital and talent at, well, an exponential rate, potentially. It's like a domino effect. One country's clarity encourages others to follow suit, leading towards a truly global, standardized market.
The domino effect, right. And here's a fascinating metric that seems to show underlying interest, despite market conditions. New Ondo addresses surged 390% in a single 24-hour period recently, jumping from 935 to 4,559. That surge, almost 400% in 24 hours, despite maybe broader market weakness, is quite something. What does a spike like that truly tell us about the underlying sentiment or long-term potential for Ondo, beyond just temporary buzz?
That's a very profound indicator, I think. It suggests that even when maybe speculative interest is low because of market conditions, there's strong organic growth in genuine user adoption, or at least exploration. People are looking into it. It tells us that Ondo's value proposition, that stable yield from real-world assets, is resonating with a growing number of individuals who see its long-term utility, regardless of short-term price movements. This kind of address growth, especially during quieter market periods, often signifies fundamental strength and a widening recognition of the project's utility and potential. It hints at a deepening user base, not just transient traders.
A deepening user base, that makes sense.
Yeah.
Now let's talk about the Ondo token itself. What's the fuel actually powering this whole ecosystem? How does the Ondo token fit into this grand vision, and what's the fundamental power it grants to its holders?
Yeah, the Ondo token is central to the entire ecosystem. It's the governance token for the Ondo Finance platform. This means holders aren't just spectators, they're active participants in decision-making. They influence crucial aspects like protocol upgrades, economic parameters, strategic directions. The fundamental power is decentralized control, ensuring the community has a direct say. This aligns user interests with the platform's growth and vision. This decentralized autonomous organization, the DAO, is a key mechanism for shared ownership and hopefully long-term sustainability.
Okay, shared ownership via the DAO. And looking at the tokenomics, the total supply of Ondo is capped at 10 billion tokens. Initial unlock supply was 1.4 billion. It quickly gained significant market interest, reaching a market cap over $1 billion shortly after its public launch in January 2024. With significant portions allocated for ecosystem growth, 52.1%, and protocol development at 33%, what insights do you draw from this allocation strategy?
Well, the allocation strategy seems quite forward-looking, devoting over half the supply to ecosystem growth and a third to protocol development clearly signals a long-term commitment to expansion and innovation, rather than focusing just on short-term gains. It seems to be about building and incentivizing participation, which is vital for any growing Web3 project. However, the initial unlocked supply, while substantial, also needs to be managed carefully in relation to market demand, of course.
Right. And as for its utility, Ondo tokens aren't just for voting, as you said. They support ecosystem growth by incentivizing users to hold and engage. Users might get fee discounts, and it can even be used as collateral for certain products. And of course, users can stake Ondo to earn rewards or unlock features. But realistically, compared to some really complex DeFi tokens out there, does Ondo's current utility feel maybe a bit too simple? Could this be a limiting factor for its long-term value proposition without further development?
That's a fair assessment, yeah. While governance is a powerful utility, definitely, and fee discounts or collateral use are practical, the breadth of utility for Ondo is currently simpler than some multifaceted DeFi tokens with really deep protocol integrations and maybe complex revenue sharing mechanisms. So this could indeed be a limiting factor for its long-term value. Sustained demand for a token often correlates with its diverse utility and how deeply it's integrated within the broader ecosystem. However, it's also important to remember that the RWA space itself is still maturing. As Ondo's products and platforms like Ondo Chain evolve, we might see more sophisticated utility for the Ondo token emerge, perhaps tied directly to its new offerings like revenue share or staking mechanisms that benefit directly from platform fees. It's early days still.
Early days, right? You mentioned Ethereum was foundational. How does that relationship with other blockchains like Solana and Cosmos play out for Ondo now? And just for our listeners, how would someone typically acquire Ondo tokens if they were interested?
Good question. So Ondo Finance launched its first products and the Ondo token on Ethereum. They leveraged its established security and infrastructure, which provided a strong base of trust, especially early on. However, to truly serve a global dynamic market, they've strategically expanded to other blockchains like Solana and Cosmos. This multi-chain approach enhances liquidity, potentially reduces transaction costs for users on those specific ecosystems, and just broadens their overall reach. As for acquiring Ondo tokens, you can generally find them on major centralized exchanges. Or you could swap other cryptocurrencies like ETH using a decentralized wallet or a swapping service like Trust Wallet, depending on which network you prefer to use.
Okay, multi-chain for reach and flexibility. And as with any growing project, we also need to consider potential volatility. There are strategic token unlocks planned for 2025-2026. While these funds are meant to support ecosystem growth, what kind of impact could they have on market dynamics? What should the community be watching closely there?
Right, token unlocks are always a double-edged sword in crypto. Always. While they fund critical ecosystem development and incentivize core teams, which is necessary, they do introduce a significant increase in the circulating supply. More tokens become available to sell. This can certainly create short-term supply pressure and potentially price volatility, especially if it's not absorbed by growing demand for the token. So the community should closely monitor the vesting schedules when these tokens unlock the market's ability to absorb that new supply, and importantly, whether the capital from these unlocks is being deployed effectively. Is it creating new value, driving further adoption? That increased demand would, in turn, help offset the increased supply. It's a key factor to watch for Ondo's price action over the next couple of years.
A key factor indeed. So, no journey into a new financial frontier is without its challenges, and Ondo Finance is certainly no exception. It's important we look at the potential hurdles and the competitive landscape ahead. What would you identify as the biggest risks or challenges Ondo faces as it continues to scale?
Absolutely. The road ahead is definitely not without obstacles. One of the biggest probably is regulatory uncertainty. Legal frameworks for tokenized assets are still evolving globally. It's patchy. The U.S. President's Working Group report from January 2025 clarified that RWA regulation depends on the underlying asset's nature. So SEC for tokenized securities, CFTC for commodities, that helps a bit. But we're still expecting crucial SEC guidance on tokenized assets in Q4 2025, which will be a major indicator for everyone in the space. Then there's interest rate dependency. A prolonged period of low U.S. Treasury yields could, naturally, reduce the attractiveness of Ondo's main yield-bearing products. Their appeal is partly tied to those rates. Competitive risk is also significant. Ondo faces increasing competition from other RWA platforms like Securitize, Circle, MakerDAO, and MantraChain, among others. It's getting crowded. My earlier point about limited token utility also remains a potential challenge without further development to make it more integral. And of course, there are the inherent technical and security risks with any blockchain-based system, smart contract vulnerabilities, cyber attack. Those are always present concerns.
It's true about the competition getting crowded. You mentioned MantraChain, which seems to offer a broader range of tokenization services. But is it solely about head-to-head competition in this emerging RWA space, or are we seeing more collaboration maybe? How does that dynamic play out for Ondo?
That's an excellent point. While competition is definitely fierce, the RWA space is also quite ripe for collaboration, partly because it's still in its infancy. For example, MantraChain, while technically a competitor, plans to launch an RWA savings vault that's actually powered by Ondo's USDY. This is a perfect example of synergy, right? Competitors leveraging each other's strengths to build a more robust and attractive ecosystem for the end user. It shows a certain maturity in the market where platforms realize that perhaps a rising tide lifts all boats, especially when you're trying to onboard traditional finance, which is a huge task. So Ondo's strategic partnerships, even with potential competitors, seem like a testament to this collaborative spirit.
Collaboration alongside competition. Interesting dynamic. So, looking ahead, what's on the roadmap for Ondo Finance that could truly solidify its position or help navigate these challenges? What should our listeners really be watching for?
Well, Ondo's roadmap seems to balance that RWA innovation with a dose of regulatory pragmatism. Key upcoming items to watch include the continued scaling of their global markets platform, bringing stocks and ETFs on-chain. That's ambitious. The full Ondo Chain mainnet launch, expected in 2026, will be a major test of their institutional-grade Layer 1 vision. Will institutions actually use it at scale? And critically, the SEC's decision on the 21 shares Ondo Trust ETF filing, that's expected in Q4 2025. This ETF filing, if approved, could be a monumental institutional validation, not just for Ondo, but for the entire RWA sector. It could open the floodgates for a completely new wave of capital. These are the kinds of milestones that will truly shape their future, I think.
Okay, let's try and unpack this for you one last time. Ondo Finance represents a really significant advancement in integrating traditional finance with blockchain technology.
Yeah.
They're not just, digitizing assets. They're fundamentally altering how we access and interact with them, making them more fluid.
Exactly. By tokenizing real-world assets and offering institutional-grade financial products, like those yield-bearing treasuries, Ondo is actively paving the way for a more inclusive, more accessible financial ecosystem. It's providing stable yield opportunities, but with all the efficiencies, the transparency, and the global reach that blockchain offers.
Our goal today was really to give you a shortcut to being well-informed about this rapidly evolving sector, providing you with fascinating insights into how these real-world assets are confidently stepping into the digital age. It's about empowering you with knowledge, not just, bombarding you with data.
Indeed. And as traditional players like BlackRock deepen their own blockchain footprints and countries like Indonesia embrace tokenization, the big question for you becomes, can Ondo sustain its pioneering momentum in this rapidly evolving landscape? And maybe more personally, what role might you ultimately play in a financial future where potentially every asset could be a token? How will these innovations reshape global investment for institutions and individuals alike? Lots to think about.